Simple is better than too much thinking. Thinking too much can stop you from doing. It's like standing still because you're not sure which way to go. Don't expect too much. Just go and do. Simple is better than overthinking. That's kind of the main point here, right? What's the biggest problem with people in trading? Second guessing instinct. I would say first and foremost, let's talk about me, my biggest problem, right? Second guessing that instinct. I see an impulse, I build a plan, really I make it so that all I have to do is click a button, say yes or no, because I've already planned out the trade, right? This SPY to 417 is a fantastic example. So here's what I had said in my plan, right? We were looking for SPY to 417. We got exactly that, which is bouncing right off the top of the range that we had outlined from the last couple of, I would argue, expressive bands of volatility touching off the lows. What we wanted to see was a bump off that 417, which is what we got. And the plan was to scale into the late or mid-March 2024 470 calls. We added some up here. I closed back the short on some and I added some more long. That was the plan, right? And in most cases, people can become paralyzed. I would like to just kind of call to how many of you raise a hand or type it in the chat? How many of you found yourself stuck in analysis paralysis in your life? Forget trading, in your life. How many of you have been stuck with analysis paralysis? Overthinking, leading to a lack of a decision or ambivalence, leading to a result or outcome that you did not desire. Who here has experienced that overthinking, that analysis paralysis? How do we counter that paralysis so that we don't end up in a position in which we can no longer make an educated and informed decision with our money, mind you, right? So think about the market like this. You get a stranger that walks up to you on the street and he says, hey, you give me 5, I'll bring you 10. Just trust me. You don't know anything about them. You don't know how they're going to get you the money. And let's say you need the money in less than an hour. So you've got a time constraint, which is a problem. You've now put capital into the deal, right? So you're out money right now. And you have an expectation this guy's going to come back. But you didn't do your due diligence, right? You didn't look into anything about this guy. You don't know what he's doing, where he's going. Plot twist, he doesn't come back, and it's about reaching about 55 minutes. You have to be somewhere else in which you needed that money. And now all of a sudden you're in a whole secondary set of problems because you quite simply just didn't have the discipline to investigate, do a little research, trust your instinct, and make a decision that's informed based on that research. It's not as simple as that in the market, but you guys get the point that those things make a difference. They make a huge difference. And being discriminate with what we decide to do with our money should be near the top of that list when it comes to personal autonomy. I mean, the truth of the matter is, if you're not protecting and caring for your money in the same way you'd protect or care for a child, then what are you really doing? You need money to live in this day and age. And many people start with the opportunity to thrive, and they start with the capital to get something done, to do something, right? And what happens is through YOLO, through lack of a discipline, to just aimless, baseless guesses, throwing darts at the stock market, hoping that you get the return that beats the market, it's the guarantee that you're going to lose. And here's the thing, big money counts on that. Wall Street counts on that. They want you to do that. And if you do that, you're giving them exactly what they want, which means they're going to take advantage of that and they're going to make it hurt. And if they make it hurt, then what happens? You lose your money and you're out of the game. If you can't play the game, you're never going to win. If you can't compound your money, you're just going to continue to suffer and struggle and barely scrape by. And the thing is, you don't have to. It's not written in stone. It's not a guarantee, but your choices will define that. I was talking with a friend earlier that our intent guides the thoughts, then our thoughts guide the actions, actions guide the consequences, consequences guide our character. So if we're truly looking at this as a matter of character, which it is, having that discipline should be of the utmost importance. I think the overthinking comes with the territory. I mean, just by definition, if you're getting into trading and investing, you're probably someone that likes to research, likes to analyze things, likes to look into things. We can understand those as kind of just the basis of the kind of person that gets involved in stuff like this. The problem is when that overthinking isn't guided by rationale, it isn't guided by practical wisdom. That's the whole thing of how this works. If it's not guided by practical wisdom, then it's never going to get you anywhere. You can't learn, as we talked about last week, you leave the pain of the loss behind, but you carry the lesson. Losses will be the best thing that ever happened to you if you leave the loss behind, but you carry the lesson. That's the key to all of this. And I would argue that that's the key to life in general. If you can leave the loss behind but carry the lesson with you, you are literally just you're just stacking wisdom on top of wisdom on top of wisdom. And that's the greatest thing anyone could do at all. So I think for anybody that's really trying to make this worth doing, it's trying to make this happen for themselves, that's trying to make this into an income stream, that's willing to make this into something that'll change your life, then you absolutely have to do it this way. If you don't, then you're just going to continue to whittle yourself down until you have nothing left, guys. I mean, that's the whole thing. So taking this a step further, right? Like, what does this mean? I know a lot of this is like really out there and people are probably like, well, what the hell does this mean for me? Well, what we're focusing on right now is we just talked about something very simple, but very important, right? We talked about the overthinking in trading is one of the, I'd argue, most toxic qualities one could possess in any given trade, because it's the delusion and the lies that convince us that this is still a good trade, that this still is, the setup's still here, even though the setup fell off months ago, right, or weeks ago, or whatever happened. I love this. You learn more by losing than by winning at times, if not. I would agree with that 100%. That your losses, again, if you leave the loss but you carry with you the lesson, you're going to be very good at this. So had we broken down this trade on the SPY, right? We talked about that 417 bottom and that being the opportunity, given that it's the top of the previous range right here, that would be an opportunity to go long if the market holds up. We could just completely ignore this, right? Or we can follow the plan and take a calculated position that has a ton of upside, which is what I did today. So the plan is that if we break below this low, then we stop out, we lose that little bit. Shouldn't be more than 10, 15% at most. The upside is 5 times that. So the risk reward is there. The trade makes sense. We made a plan. The goal is to follow it with discipline, which means add when we find those support levels and we hit those support levels, sell when we hit those resistance levels that we've mapped out ahead of time, and then let some ride for the longer term trade. So the question is like, can we execute on the plan that we developed? And I would argue that if, without a simplistic philosophy, we're going to always fail at that. So we have to be simple. We have to be simple.